Okay, everybody, here we go. I believe that we are live. Lovely. So, this is my post market wrap up on this Wednesday, May 31st, 2023. Before we even get started, I just want to welcome all of you here. Thank you. All my friends are here. It's fantastic. So, we got a slew of economic news today, and I'm gonna give you a one guess. Well, it was all bad, but it's kind of interesting. So, according to the Federal Reserve's own data, on top of, well, let's start off with this. So the Chicago PMI, which is a measure of economic activity, I can't even get the words out, is now in contraction for 9 consecutive months. So the economy is shrinking. Okay, shrinking more and more. As a matter of fact, we missed the mark by a mile. The Chicago PMI number was supposed to come in at like 47 in contraction. Anything below 50 is contraction. We came in at 40.4. All right, that's part one. Part two, the ISM Business Barometer has now fallen to a 6-month low. Okay, so right out of the mouth of the Federal Reserve, are you ready for this one? Economic activity has deteriorated. Okay, now you and I are clear on this, at least I hope so. What am I talking about? The real reason why the Fed is raising rates along with other central banks. It's not has nothing to do with pushing off inflation or even reducing inflation. It's about cutting off the availability of credit to US small businesses here. In this case with the Federal Reserve, they want to erase small businesses. We used to be the backbone of our economy. They want it gone. Why? To fulfill the corporate agenda. So that's really what's happening here. So, as you have been aware since literally day one, the Fed is now on a mission, more so than ever, to kill the economy by crushing the consumer. So, according to their own data, out of their own mouth, the economy is not doing so well. It's deteriorating. That's the word they use. Now, with regard to inflation, prices are still rising. Duh. That's what I wrote. Prices are still rising. And they want you to know this. Okay. This is where it gets to be almost too much for me and I start to freak out. So, stunning admission. Okay. Federal Reserve, prices are still rising. Now, according to the Federal Reserve, the consumer nowadays is more sensitive. They're more sensitive to rising prices. So, let's define that for a moment. So the Federal Reserve is saying here, thank you, Mitch, that the consumer is more sensitive to rising prices. How do you read that? What's your take on the consumer being more sensitive? You mean they can't make ends meet? They can't cope here? They're borrowing beyond their eyeballs just to try to make ends meet? They're tapping into the retirement plans, 401k. So that must be what they mean by the consumer, and this is not my words, this is from the Federal Reserve, is more sensitive to rising prices. Meanwhile, prices continue to rise, no surprise to you and me. Now, going back to this economic data, again, the Chicago PMI, the ISM Business Barometer, they want you to believe. Are you ready for what they want you to believe? They're telling us right away the economy is deteriorating. But apparently we're adding more jobs than they thought we would. Oh, that's just great. Let me tell you this, okay? If you don't know, it's garbage. Okay, we're not adding any more jobs than anyone expected. And what kind of jobs are these? Really high-paying jobs? You know, six-figure salaries. People are doing fantastic and great as the economy around the world continues to free fall. Really, honestly, the consumer is done. They're maxed out here. It's a crazy setup what they did. You and I, Eric. Thank you. Yeah, you know, yes, it could have been until Wall Street got its hands on Bitcoin. Here now with Wall Street, their hands on Bitcoin, and this you have to understand. You know, we'll address questions later on, but unfortunately, the crypto space is so small. Again, the entire market capitalization, the entire crypto space is less than one Dow component. Very few people hold this stuff. Okay, it's more or less the bulk of it is held by, again, not that many people. Anyway, with that said, let us move forward. So, how many of you are buying the fact that, again, by their own admission, the economy's dead and buried? It's over, and I can promise you, be ready for this, people, because you haven't seen anything yet. Again, crisis to crisis to crisis. That's what we're getting here. And but the consumer is very sensitive to this stuff. That's according to the Federal Reserve. So a weakening economy, precipitously, and Strong's jobs report. No, doesn't add up. Let's um, let's look over at this market. Number one, okay, I know what you're looking at. You're watching the debt market. Are you watching the yield curve? The whole damn yield curve is dropping. What does that mean? Somebody, some entity out here is buying a lot of debt. Again, when you see bond yields drop, thanks again, Mitch, okay? When you see that, that means that there's a rally going on. People are buying, or some entity is buying the debt. Who's buying it? I'm going to give you one freaking guess again. This is a little bit of a relief, I guess you would say, rally in the debt market because of this whole debt ceiling issue. We were going to default. We're not going to default. The debt market was pricing in the default a little bit here. We'll see how this plays out. But again, but this mechanism, bringing down the entire yield curve like this, opens a doorway for cash to go back into the stock market again. Propping up the stock market gives the illusion that the economy is strong, that the economy is doing well. Many people look at the Dow Jones Industrial Average or whatever it might be, rah, 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 stock market's great. Oh, that must mean the economy is strong. No, there's no connection here. Economy in free fall, market seems to be defying gravity. You know, I did sell my puts a little too soon, as you can tell. Here, the market did finish lower. Anyway, that's okay. Let's talk a little bit more. Going back to this market. So we did finish in the negative today. The real story again is the yield curves, the 10-year yield, MMRI dropping, relative strength of the dollar slightly higher, relative meaning comparative strength. Gold and silver did good today. Okay, they both caught bids. Cryptocurrency got hit. Crude oil got hit as well. In my opinion, okay, and you do what you want with this, people. I really believe that crude oil is a buy right now. Commodities are a buy right now. We are in a global debt expansion cycle unlike anything we've ever seen before in the history of the world. Thank you, Pace Arrow. I appreciate that. Yeah, Exxon not doing too well. I got it. I think it's a buy. I really do. Thank you, Sea Wife. I appreciate that too. Um, Exxon also pays a nice dividend as well. Energy, get exposure here. In my view, moving forward, people, come on. This is a no-brainer, at least in my book. Think about it. Again, is the market going to continually defy gravity from here into eternity? No. Thanks, Perry. I appreciate that too. Natural gas too, another thing you need to have in your portfolio. Leverage ETFs, if that gives you exposure to energy, absolutely. There's a whole bunch of them out there. Absolutely. I'm not overly familiar with Pioneer Natural Resources, honestly. DVN, another one that's good here. Anyway, look, at one point, there's no doubt in my mind, and I'm sure yours, this whole thing is going to get extremely real. You can't inflate the global debt in perpetuity without there being a price to pay. Pulling all of this cash into the now from the future has created this alternative universe that we're in. And there's going to be a very, 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 very high price to pay for this in the form of, again, a crisis. They're going to throw another crisis at us. I have no idea what it's going to be, but you can count on it because that's how we function. Crisis to crisis to crisis. And every one of these crises, however you say it, has a common theme. And that means it needs more cash to be thrown at it. I mean, this whole debt ceiling crisis here. Well, how do we fix that? Well, we expand the debt. I mean, come on, people. I mean, it's a no-brainer here. So you're just going to do what we've been doing, bending against the debt, becoming your central bank here. Thank you, Trivera Gray. I appreciate that too. Anyway, people, look, you got this down, and as you can see, I didn't freak out too much today. Yesterday, I think I was sweating, man. I was losing it. So, what do you think about all this? Do you buy it? I mean, it's amazing how they can tell you round after round after round of abysmal economic news. Economy in contraction here for 9 consecutive months. Business barometer falling off of a cliff. But they want you to believe that we're adding jobs. It's just not true. As a matter of fact, look at what I wrote. Fake. Can you see that? Fake. Well, I mean, when you hear this stuff, I just jot down these little things. The truth of the matter is, we are in an economic death spiral that is inescapable, and it's inescapable mostly, or I say, in whole part, by central banks who control the economy. Again, tell Greg Mannarino yet again, who is it that controls the economy? Is it our politicians? Is it you or me? No, it's central banks. Who controls the financial markets? Is it politicians, you and me? No, it's central banks. Who controls the entire financial system around the world? Is it our lovely policymakers, kings, queens, presidents, monarchs, or dictators? No, it's central banks. They control it all. Who controls the flow of information? It's central banks. Who's the real government? It's central banks. The rest of it don't matter a damn thing at all. Anyway, that's the truth here, people. I think we're all pretty much on top of what's going on here. We got to improve these thumbs up. I can't believe we only got 404 thumbs up with 1,257 people here. Come on. I need you. I need all of you. These thumbs up are valuable. Like I told you, YouTube, when it sees those thumbs up, the algorithm picks it up and says, hey, people like this video. Maybe we should share it. So again, it's up to you if you want these videos out there. If not, whatever you want to. I do these for you guys and girls, pretty much, and that's where we stand here. Let me ask you something. This is again today from the Federal Reserve, who admits that prices are still rising. And do you know why? Because inflation is sticky. They love that word these days. It's sticky. And if you notice, that same word is being used by CNBC, Bloomberg, Fox Business. Same word, sticky, 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 sticky. Means it's sticking around. Like we didn't know that. Oh, that's right. We were told by everyone it was temporary and transitory. And by some miracle, the Fed was going to raise rates and this was all going to turn around. No, not going to turn around. Not even close to turning around. It's going to get a lot worse. But again, where's the uprising? Where's the revolt? They admit that the economy is deteriorating. They admit that inflation is continuing to rise, more so than they even imagined. And people are sitting back and taking smack across the face, backhand across the face, and told they're going to just deal with it. Like, you know what it is? I think people believe, and this is a big deal. People believe that somewhere down the line there is some hope on the horizon in the form of another figurehead that sits behind the resolute desk. Ain't going to make a difference at all. Okay, again, who runs the world? It's central banks. It's not president, kings, monarchs, or dictators. It is central banks. Period. You understand? I think we're pretty much on the same page with this, people, you and I. All right, look, that's it. Thank you for those thumbs up. I always like to see those thumbs up. We're getting there, 630. Please share the video. Please comment. What's going on? My thoughts on Anacott Steel. Anacott Steel's a buy. You should be buying July 50 calls here. Use the offshore accounts as well. And I'm making this up. Okay, I hope you got that too. Thank you, Peter. I appreciate that. Ugly people. Okay, yeah, okay, lovely. Thanks, Mitch, again. I appreciate that. Blue Horseshoe loves Anacott Steel. You know that's true. All right, people, I'm going to get going. Thank you all for being here. I so appreciate you like you have no idea. We will reconvene tomorrow. Keep your eyes on the 10-year yield. Watch the yield curve. Forget what's going on here with the stock market as of late, honestly. It's really the driver. It's the debt market behind it all. It's so fake. It is so rigged. There's no price discovery at all behind a single asset because of what's going on here in the debt market. You understand? And in my view, there's going to be a terrible price to pay for this. Absolutely. Absolutely. All right. Love you a lot. I'm out of here. See you in the morning. Well, that's all.